Hey guys, Scott here. I keep getting the same comment over and over again. People are saying, look at Canada, look at New Zealand. Their housing markets crashed, so Australia has to be next, right? By the way, I already did a full breakdown on New Zealand, what caused that crash, and whether the same thing could realistically happen here in Australia. I'll link that video right here if you want to watch it after this. But today is Canada, because on the surface, it just makes sense. Australia and Canada look very similar. Both had massive COVID booms. Both dropped interest rates to the floor. Both relied heavily on migration. Both saw house prices go crazy. And now, while Australia's housing market just keeps pushing higher, Canada's has gone the other way. It crashed hard. There are landlords in Canada who paid $1 million for a home a couple of years ago, and now that same property is worth $600,000 or $700,000. So the big question is very obvious. If it happened there in Canada, if it happened in New Zealand, can it happen here in Australia? Today, I'm not giving you opinions, I'm not giving you hype. I'm just going to walk you through the numbers in plain English and show you where Australia and Canada were the same and exactly where they split. And after that, you can decide for yourself whether an Australian housing crash is actually coming or whether people are just hoping it does. And just a quick one before we get into it, I do these videos daily. Property, the economy, and what it actually means for you and your next move. So hit subscribe right now and tap the bell so you don't miss one of my daily videos. All right, let's get into this. Let's start with what nobody actually argues about. During COVID, Australia and Canada were running the exact same playbook. Rates went to the floor by their central banks. Governments pumped stimulus into the market. Borrowing got easier and property went crazy. And you can see it clearly in the big cities. Sydney's median value surged about $250,000 from 2020 to early 2022, reaching roughly 1.2 million median house price. Toronto went even harder. Its median surged about 400,000 over the same period, hitting roughly 1.3 million. Then borders reopened, and both countries went hard on immigration to rebuild growth. Students came back in, both countries. Temporary residents came back. Demand stayed extremely hot. Then inflation hit, and both central banks lifted rates. So both countries saw that same thing happen in 2022. Borrowing power dropped, and prices pulled back. That's where most people stop, but that's also where the story changes. Fast forward to today, Australia's housing market is up about 9% over the past 12 months. Canada's is down about 3.7%. Same kind of countries, same kind of boom, same kind of rate cycle, very different outcome. So why is this so? It comes down to two buckets. The first bucket is the economy, and the second bucket is the housing system itself. Let's hit the economy first. So housing demand starts with jobs, employment. It always starts there. In Australia, unemployment is extremely low at 4.3%. That is low and it is still stable. And we still have skills shortages across a lot of industries. People have income. People can service mortgages. People aren't being forced to sell. Now, let's take a look at Canada. Their unemployment rate has climbed to around 6.8%. And in places like Toronto, it's getting close to 9%. That's a massive difference because when unemployment rises, demand doesn't just slow, it breaks. If you lose your job, you cannot buy. If you fear losing your job, you don't stretch yourself. And if investors are nervous, they step back. Australia hasn't had that kind of labor market shock. And that's one big reason why Australia hasn't cracked the way Canada has. So let's talk about population because this is where things get really clear. Australia's population grew by about 1.6% over the past year, one of the highest in developed countries. That is a huge number. As a result, demand for housing is still being fed. Now let's take a look at Canada. Canada's population went backwards, down around 0.2%, because the government slammed the brakes on immigration. Their immigration settings were basically overhauled. The approach shifted hard. They got far more selective around permanent residency, and as a result, temporary residents have started leaving Canada. So while Australia is still welcoming people, Canada is losing them. And that alone is enough to explain why Canada's market cooled harder. Less people, less buyers, less renters, less pressure, but there's actually more. And let me give it to you now. Here's something people miss about Australia. Australian households are financially stronger than people think. Our household savings ratio is around 6.4%. Canada's is closer to 4.7%. That means Aussie households, even under pressure, are still saving more. Now add lending standards. Because in Australia, banks stress test borrowers at 3% above their actual mortgage rate. Here's what that means in plain English. If you borrow at, say, 6%, the bank doesn't approve your loan unless you can still afford to pay it at 9%. That is law. So even if rates go up again, the system is built so people don't instantly snap. And that's why I keep saying it's not just that demand is high in Australia, it's that the demand is more stable and more resilient as well. In Canada, that stress test buffer is closer to 2%. So households there hit their breaking point a lot earlier. Okay, so now we've looked at the household level, let's now zoom out a little bit. Now, Australia's total housing market is worth roughly 12 trillion. Total mortgage debt, meaning if you add up every mortgage across the country, is only 2.4 trillion. That gives Australia a national loan to value ratio of just 20%. Here's what that means in plain English. It means the country's housing debt is small compared to the value of the housing asset underneath it. So even if prices wobble, the system doesn't instantly become dangerous or unstable. Now compare that to Canada. Canada's housing market is worth around 4.2 trillion, with around 1.6 trillion in mortgage debt. That's an LVR close to 39%. So when prices drop in Canada, the system becomes riskier much faster. Now let's talk about another factor, tax to GDP ratio. Australia's tax to GDP ratio is around 23.6%. Canada's is much lower at 14.2%. Now I want to give you a simple way to think about this. This is like the difference between someone with a bigger, more reliable paycheck versus someone with a smaller one. Because the bigger and stronger your tax base is, the more capacity your economy has to carry big debts, absorb shocks, and fund big systems. You don't sign up for a huge mortgage unless you've got strong income backing it up, okay? That's the point. Now, one more big piece that people ignore, supply. And this is massive and very different. Australia's housing completions have hit rock bottom. Approvals go up and down, but completions are what actually matters because completions are homes people can live in now. Canada, on the other hand, has seen completions rise by about 15%. Canada has more supply hitting the market there while demand is falling. Less supply hitting the market here while demand is still strong. That is a completely different setup. Now let's talk government behavior. Canada has actively tried to cool the housing market. They cut demand, they cut immigration, they boosted supply, they accepted falling prices, they were willing to bear the pain of declining home values. Australia will not do that. Housing here is the backbone of the economy. Most household wealth is tied up in property. Our biggest companies are the big four banks. And the banks here have a huge chunk of their balance sheets tied to housing. In Canada, their biggest companies are far more tied to other sectors like tech and energy. In Australia, housing is the center of gravity. So when the Australian government looks at Canada, they don't think, let's copy that. They think, that is exactly what we never want to happen here. They've basically said it themselves. They don't want house prices to fall. They don't want to crash. They want prices to keep rising, just at what they call a more sustainable pace. So the government will do absolutely everything in their power to keep the house prices growing. And you can clearly see that with the way they are managing our current housing crisis. Whether you believe they're doing this deliberately or whether you think they're just incompetent, I honestly don't care. What matters is the outcome. Completions are still at record lows, supply is still tight, demand is still being fed through high migration and easier first-home buyer schemes. And then they stand there smiling, saying they're helping. But when you look at the setup, you can see why the pressure stays in the system. So take all of that and tell me this. Does Australia really look like it's set up to crash like Canada? Or does it look like a market that can bend, wobble, slow down, but not break? All right, let's land this. Could Australia have dips? Absolutely yes, and it will. Could we see some short-term pullbacks in certain markets? 100% yes, we will see that. But a Canada-style crash needs a very specific mix. You need unemployment to blow out. You need population growth to reverse. You need forced selling to rise. And you need a government willing to let prices fall. Right now, Australia is not doing any of that. So if you're waiting for Canada to repeat itself here in Australia, you might be waiting a very long time. Now, I do want to hear from you. Do you think Australia will follow Canada eventually? Or do you think our system just won't allow it? And does this change your next move? Or are you still sitting on the sidelines hoping for a crash? Drop it in the comments. And if you want daily updates on property and the economy, hit subscribe and tap the bell so you don't miss the next video. This was your daily property update. I'll see you at the next video.